So here for our business, we have trial balance as at 31st December 2024, the adjusting entries and the adjusted trial balance. As you can see, this entry require debit and credit sides, and some of the calculations have to use formulas. For trial balance, balancing figure, we use the formula sum open bracket B6 to B34 close bracket for the debit side, and sum open bracket D5 to D30 close bracket for the credit side. So from the adjusting entries, we can see that the debit side from E23 to E41 and credit side from G6 to G39 requires a few adjustments. Okay, so lastly, for the adjusted trial balance, we have doubled or lessened the amounts according to the adjustments made using the formula if. So for example here, for capital on credit side, we use the formula equal to if open bracket 0 less than B6 plus E6 minus D6 minus G6, comma, B6 plus E6 minus D6 minus G6, comma, double quotation and close brackets. Same goes for the purchases on debit side. We use the formula equal to if open bracket 0 less than B5 plus G5 minus B5 minus E5, comma, B5 plus G5 minus B5 minus E5, comma, double quotation and close brackets.
Now, I will be presenting the statement of profit or loss of JSI Enterprise for the year ended 31st December 2022. First, in terms of sales performance, the business recorded total sales of 180,000 after deducting sales return of 3,800 and discounts allowed of 1,600. The net sales amounted to 174,600 ringgit, which I put in the sales equal to C4 plus C5 plus C6 for the total of net sales. Next, I will explain the cost of goods sold. The opening inventory was 35,000. Purchases during the year amounted to 94,300 ringgit, and after deducting discount received of 6,800, net purchases were 122,500 ringgit. Additional costs such as carriage inwards of 2,400 and insurance on purchases of 1,000 were added, resulting in cost of goods available for sale of 125,900 ringgit. After deducting the closing inventory of 26,500, the cost of goods sold was 99,000 ringgit 400. As a result, the business earned a gross profit of 75,200 ringgit, indicating that its main trading activities are profitable. In the sales, I use equal C13 plus C14 plus C15 for the cost of goods available for sale and equal D7 minus D18 for the gross profit. The business also earned other revenues, which includes sales commission of 4,500 ringgit and interest on fixed deposit of 375 ringgit, giving a total of 4,875 ringgit. Now, moving on to expenses, the business incurred costs such as salaries, legal fees, telecommunication expenses, depreciation, and interest on loan, which total 79,720 ringgit. Finally, after adding other revenue and deducting all expenses, JSI Enterprise recorded a net profit of 355 ringgit for the year ended 31st December 2022. In this case, I use equal sum brackets D22 and D23 for the total revenue and equal sum brackets C26 and C21 for total expenses and equal D19 plus D24 minus D32 for the net profit.
For the statement of financial position, we mainly use the plus and the minus formula to calculate additions and subtractions for each individual items under the assets, equities, and liabilities. And then, after adjusting all the figures, we use the sum formula to total up all the values of total assets and the total equity and liabilities. And then the totals here, they should match. In this case, the balancing figure is 535 and 455.
Next, we need to do financial statement analysis by using vertical analysis and ratio analysis. From statement of profit or loss, we can get percentage of item based on net sales. To get percentage of item, we use formula equal to B4 slash $B $4 multiple 100 at cell C4. And to get other percentage, we just need to drag down the formula. We do the same thing in cell C14 in the statement of financial position. We can get the percentage of item based on the total asset using the formula equal to B14 slash $B $20 multiple 100 and get the percentage in cell C14. Then we can just drag down the formula to get other percentage since we already used dollar signs. For financial ratio report, we need to make ratio analysis. For current ratio, we use formula equal to D20 slash D35 to get 6 ringgit and 20 cents. Means the business has 6 ringgit and 20 cents of current assets to pay 1 ringgit of current liabilities. Next, for acid test ratio, we use the formula of equal to open bracket B20 minus C15 minus C16 minus C17 close bracket slash D35 to get 5 ringgit and 53 cents. Means the business has 5 ringgit and 53 cents of liquid assets to pay 1 ringgit of current liabilities. For gross profit margin, we use the formula equal to open bracket D19 slash D7 close bracket multiple 100, so we can get the answer in percentage. Means for every 1 ringgit of sales, the business makes 43 cents of gross profit. For net profit margin, we use the formula equal to open bracket D33 slash D7 close bracket multiple 100 to get the answer 0.20%, which means for every 1 ringgit of sales, the business makes 0.20 of net profit. Lastly, for stock turnover ratio, we use the formula equal to D18 slash open bracket C10 plus C17 close bracket slash 2 close bracket to get the 23.39 times, which means the inventory turns into sales 23.39 times within the year.
Alright, so here we have our CVP analysis for our business. We have the selling price per unit, variable cost per unit, and the total fixed cost that we gathered from the statements of profit or loss. We have listed the costs that it needs to find our break-even point, as you can see from the calculations below. We have used the BEP unit formula to find our BEP per unit by using total fixed cost divided by selling price per unit minus variable cost per unit, which we later get 6,950,000 units. 6,950 units. Okay. So to find our variable cost, we multiply number of units with variable cost, which is A14 asterisk absolute F7. Then for total cost, we just add fixed cost and variable cost. For sales, we multiply selling price with number of units, so we use the formula A15 asterisk absolute F6. And lastly, for the profit or loss, we minus total sales and total costs. We hit our break-even point, which is on A17, amounting 6,950 units. We can see it from the graph as well, which we only included the total cost, total sales, and the profit or loss to show the break-even point. So from this data, we can see that CVP analysis help businesses understand how changes in cost, sales volume, and selling price affect profit. It divides costs into fixed and variable and compares total revenue with total cost to determine expected profit at different sales level. One key result is the break-even point, the sales level where revenue equals total cost. Sales above this point create profit, while sales below it causes losses. Overall, CVP analysis supports planning, pricing, and decision making to achieve profitability. From the CVP analysis for JSJ Enterprise, we can conclude that the break-even point is 6,950 units.
Now, for the scenario summary, which focuses on how changes in the selling price per unit affect the company's profit or loss. In this analysis, all fixed and variable costs are assumed to remain constant, and only the selling price is adjusted. The current selling price is Rm 20 ringgit per unit, which is used as the base scenario. From this base, the selling price is increased by 10%, 20%, 30%, 40%, and 50%, resulting in selling prices ranging from 22 ringgit up to 30 ringgit. Based on the results shown in the table, we can observe that at the current selling price, the company experiences significant losses, especially at lower production levels. Even after a 10% and 28% increase in the selling price, the company is still making losses. Although the amount of loss gradually decreases, this indicates that small price increases are not sufficient to cover total costs. As the selling price continues to increase to 30% and above, the losses became smaller and eventually reached the break-even point where total revenue equals total costs. Beyond this point, the company starts to generate positive profits, particularly at higher levels of production. This shows a clear relationship between higher selling price and improved profitability.